hiver, and welcome back to our channel. If you're currently in the market for a new home, thinking about that big purchase, or perhaps you're considering a refinance to get a better deal on your current loan, then you've come to the right place. Today's mortgage rate update is absolutely crucial, and you're going to want to stick around for all the details. We've got a lot to cover, from today's numbers to what the Federal Reserve is doing tomorrow. So let's not waste any time and dive right in. First things first, let's get you the numbers you need. As of today, December 9th, the average 30-year fixed-rate mortgage is sitting at 6.35%. This is the most common loan type, so it's the one most people are watching. If you're looking for a shorter loan term to pay off your house faster, the 15-year fixed-rate mortgage is looking a bit more attractive at 5.79%. For those of you looking at higher-priced homes, jumbo loans are hovering around 6.45%. And for government-backed loans, both FHA and VA loans are currently priced just under that 6% mark, which is great news for eligible borrowers. So, that's the snapshot of where we stand right now. Now, here's where the story gets really interesting. Today was a bit of a surprise in the mortgage world. Mortgage rates remained surprisingly steady, almost flat, throughout the day. This happened even though the bond market, which heavily influences mortgage rates, actually weakened after the 10 a.m. job openings report was released. You'd normally expect rates to tick up when bonds go down. So, what happened? It seems that most lenders had already locked in their rates for the day before that bond market drop really took hold. It's like they got ahead of the curve. However, this stability might be short-lived. If the bond market remains weak when it opens tomorrow morning, we should absolutely expect to see mortgage rates move higher to catch up. It's a classic case of a delayed reaction, and tomorrow could be the day we see that adjustment. But the real main event, the one everyone in the financial world is holding their breath for, is happening tomorrow, the Federal Reserve meeting. Now, a lot of people hear Fed meeting and immediately think that if the Fed cuts its key interest rate, mortgage rates will automatically fall. It's a common misconception, but it's important to understand that it's not that simple. Don't confuse a Fed rate cut with an immediate drop in mortgage rates. In fact, if you look at history, mortgage rates often tend to rise after the Fed announces a rate cut. Why? Because the market has usually already priced in the expectation of that cut. The announcement itself can sometimes trigger a buy the rumor, sells in use type of reaction in the market, pushing yields and therefore mortgage rates higher. So, if the rate cut itself isn't the main driver, what should we be watching? The real volatility tomorrow will come from two other key things. First, the Fed's economic projections. These projections give us a huge clue into how the Fed sees the economy performing in the future, things like inflation, unemployment, and GDP growth. If their outlook is more pessimistic, it could signal more rate cuts down the line, which would be good for mortgage rates long term. If they're optimistic, the opposite could be true. The second, and equally important event, is the press conference with the Fed chair, his language. His tone and his answers to reporters' questions will be scrutinized for any hint of the Fed's future plans. Any unexpected comments could send shockwaves through the markets, and that includes the mortgage market. It's the nuance and the forward-looking statements that will really move the needle. So, let's bring it all together. What's the bottom line for you? If you're currently floating your mortgage rate and you're on the fence about whether to lock it in, today might be a very good day to make that decision. With the potential for rates to move higher tomorrow morning based on today's bond market activity, and the added layer of unpredictability from the Fed meeting. Locking in a rate today could protect you from that potential volatility. Securing your rate now could provide some much-needed peace of mind before the market potentially gets a bit choppy. If you find these daily updates helpful and want to stay ahead of the curve in this fast-moving market, do me a huge favor and hit that subscribe button. And don't forget to click the little bell to turn on notifications. That way, you'll get an alert every single time we post a new video, and you'll never miss a critical rate change or market insight. Thank you so much for tuning in. I'll see you back here tomorrow with the very latest on what the Fed did and how it's impacting your mortgage. So you 10.